I'm joined with Rob McEwen at the Red Cloud 2025 Mining Conference. Rob, it's good to see you.
Good to see you, Steve.
So the big talk right now is tariffs, and you've obviously been a pretty big influence in the Canadian mining world. So I'm curious here, when you see all this talk about tariffs and the impact that they're going to have on Canada, what's going through your head?
Well, the tariff's going to raise the price for Americans. And I don't think Canada should be coming back putting counter tariffs on. We should just be selling. I heard one comment that, and I don't know if there's any truth to it, but that some advisors to Trump had said, well, if we announce tariffs, the Canadian dollar is going to go down, which it has. And so when they put the tariff on, it's going to be about the same price that we're going to pay.
Yeah.
I don't think it serves anyone much, but I think Trump's done a good job in causing our government start thinking about how we should be improving, like on our defense, on our borders, our subsidies. I mean, he's shaking up the world and telling people smarten up. And our government should be looking at these areas, should have been looking at them much earlier. And I think it's criminal that our government was prorogued. And so Parliament shut down just at the time these tariffs are about to be implemented. There should be a big discussion at a national level about this, not some few people in Ottawa. Mm-hmm. So,
now, there's been some talk from the premiers about how to basically get the economy moving forward in a much more, we'll say, progressive way. Some of the talk out of BC with David Eby is fast-tracking mining permits. Do you think that that's something that Canada needs to focus on?
Absolutely.
Yeah.
I mean, we're choking right now on regulations, and permits are held up inordinately long. I've been in the Middle East a couple of times this year, and just astounded by certain things. One, I'm sort of offended by litter on the streets. We didn't have it when I was growing up. Mm-hmm. There's all sorts of graffiti. There is theft. There's homelessness. You go to the Middle East, and at least in the countries I was in, Saudi, Abu Dhabi, Qatar, there's very little litter. Mm-hmm. It's hard to see graffiti, see it anywhere. There's no crime. There's beautiful buildings coming out of the ground all over the place. And you go, now what's all this based on? This is based on natural resources. Mm-hmm. And I'm reflecting, and I think, we have a lot of natural resources. What's holding us back from a higher standard of living for all Canadians? It's our government and the regulations they've put in place. And there's some impediments with First Nations, that the agreements aren't there. But we're choking on regulations, and we want to get this economy moving. We should get rid of the interprovincial trade barriers and free up the labor. It's absurd where we are.
It's kind of ironic, isn't it? Because the reason that Donald wants to turn Canada into a 51st state is because he wants our resources. And it almost kind of seems like our government doesn't really want to capitalize on that they just kind of want to leave them in the ground and not actually do anything economically with them.
It's very true.
So I got to ask you, obviously you've had a tremendous amount of success in the gold space. We've seen gold run up a little bit here.
Nice, isn't it?
Yeah. What's your view on it? You think that this is the early stages of the next big leg up? What's your read on the gold market?
I think it's heading higher. Countries, doesn't matter which one, around the world have printed excess money. They've borrowed too much. And so it's driving the purchasing power of paper currencies, fiat currencies, down significantly. Mm-hmm. I mean, look at our dollar. Yeah. Compared to the U.S. We've lost enormous purchasing power. And so people in that instance say, well, where do I put my money so I don't lose the purchasing power? Gold is one of those that's been tested over millennium to serve that purpose as a store of value, protection of currency. And you have a couple of factors in the market that I found quite curious. One, I always like gold because if you wanted to sell it, it was 2-day settlement. Right now in London, the London bullion market is having trouble delivering their gold in 4 weeks. I mean, there are probably all sorts of failed contracts as a result of that. So you have that. You have the BRIC nations buying gold, dumping U.S. treasuries. And something I saw, I think a week and a half ago in the press, was that the Chinese government has now allowed their insurance companies to put up to 1% of their investment capital into gold. Now, one of the commentators said, well, they did a rough calculation, and they said, if all those Chinese insurance companies were to put 1% in, that would be $27 billion of purchases. Now, probably won't all happen, but there are a number of forces that slow delivery, buyers, and you see the price of gold going up. The ETFs have to come up with gold behind them. So they have to get in the market as well. And we haven't had the expansion of gold production. So I can see it. I mean, I've had a number of $5,000 for some time. It was 2,000, it went through 2,000, then 3,000 we're approaching. And I think it's easy 5,000 in a couple of years.
It kind of seems like Trump is tempting the world to get off the U.S. dollar right now. And from my view, it seems like the next currency in line would have to be gold. I know that we could theoretically create baskets where countries could trade, but just so many of the conversations that I've had over the last, say, couple of months since Trump's taken office with people who are in the space, it's different. There's a calmness now. There's just this overall positive sentiment that I feel like since we've started doing this for the last 5 years, we haven't really felt anything like this, and it just kind of feels like, and we're seeing it now with some of the companies that are raising money. There's big checks being written, and it's like every day we check our newswire, and it's what was the financing today that we saw? It was
Skeena was 88 million.
Skeena 88 million, and
Power Nickel.
yeah, Power Nickel 50 million. Seabridge recently. They did a $100 million bought deal, so we're just seeing more and more of that. So and M&A. But let me ask you about copper. Obviously, you're now a bit of a copper guy, a copper bull. Where do you see copper heading?
Also higher. I mean, you have the emerging nations are concentrating in populations concentrating in cities. Copper is an essential component to modern civilization. In addition to the electrification, in addition to the data farms that are coming along, there seems to be strong demand, and there hasn't been large investment in the industry to provide additional supply at this point. And you're looking at projected deficits of considerable size that would drive copper up. There was a talk this morning on batteries, and they were saying that the batteries in China made in China are much more efficient than the batteries made elsewhere in the world, but they're using twice as much copper as before. So if you think of the electrification that's taking place in the world, batteries are going to play a very big role, and copper is a large component of that.
So speaking of copper supply, let's turn the discussion to McEwen Mining. Since we last talked, you guys managed to get your environmental permits for Los Azules. What's the next steps here?
Well, we'll have a feasibility study out in the second quarter of this year. We've made application for the RIGI, which is a large foreign investment incentive scheme that Argentina has enacted and approved by their Congress. So the feasibility, the RIGI would lift our NPV from 2.9 billion to 3.8 billion, using a 375 price for copper. We hope to get the feasibility out. There's a year of engineering, and put a shovel in the ground in late 26, be in production in late 29, projected annual production at 400 million pounds of copper a year. So at current prices, that's a little better than 1.6 billion in revenue, with a 75% gross margin. Costs are projected at around $1.02 a pound cash. So 27-year life. And I like to put it on a gold equivalency basis. So if you did that, you take the gold price, divide it by the price of copper and the number of pounds, it equals the value of 1 ounce of gold. On that basis, our 37.6 billion pounds of copper is equivalent to a 55 million ounce gold deposit, producing 600,000 ounces gold a year at a all-in sustaining cost of $1,100 for 27 years. And only at that point, we're only mining less than 40% of what we've drilled off. So it's a multi-generational, long life, large producer.
Now, I have to ask you about Goliath Resources. You guys recently did a deal with Goliath, and it's funny because we did a piece on Goliath about 2 weeks before, suggesting that Rob McEwen would not sit back and see those drill holes and not want to invest. And sure enough, and we were comparing it to Great Bear. Sure enough, the announcement comes. McEwen Mining gets involved. What can you tell us? Why did you like that project?
I like high grade. I'm in love with high grade. I've been following the company for a while. I had some money in it already, and they were pulling some spectacular holes. And that part of the world, in British Columbia, it's well mineralized, and I think there's much more to that story.
So McEwen, you guys also did a resource update on the Grey Fox gold property. What can you tell us there?
We're up to 2 million ounces in indicated and inferred. We've been spending quite a bit of money on exploration up in Timmins, and very encouraged by what we're seeing. Right now, this year, we'll do about 30,000 ounces at Fox. 2 years out, we can see doubling that. We're moving our production across. But with this exploration success, we're looking at, conceptually, we'll be able to increase production 5x by 2030 at Timmins, which would lift our overall production from about 130,000 to just under 250,000 ounces of gold a year.
At this stage, what's the long-term vision for McEwen Mining?
Oh, well, what I'd like to see is a higher share price.
Yeah.
We're trading well below what I think is the value. We have 3 components. We have 46% of McEwen copper. And so when it goes public, we're going to do an IPO after we get the RIGI and the feasibility done. I can see a lift. I think we're trading at less than a quarter of what BHP and Lundin agreed to on their Jose Maria and Filo del Sol project. We're in the same province as they are, those 2 deposits. We're at a lower altitude. We're closer to infrastructure. We're a larger resource than the combination of the 2. And we're in low cost. So I look at that and say, when we go public, we should see at least a jump, a double in the value that we have on Los Azules. So you have that going for you. You have our gold assets weren't working very well from 2019 to 22, but we're up 140% since the September of 22. We're up 4.5 times the price of copper, 2 times the price of gold, twice the Dow, twice NASDAQ, and I think that's just the start.
Okay, well, Rob, thanks very much for hopping on here. It's always great when you take the time to chat with us. I know our audience loves it. So good luck in the coming quarters, and please keep coming on here and chatting with us.
Thank you for the invitation, Steve.